Welcome to the Near Memo, a weekly conversation about search, social, and commerce. What happened, why it matters, and the implications for local.
So it's a good segue, Greg, into our final topic for today,
exactly.
which is a survey of 100 e-commerce executives, retail executives from a company called Ecommerce Next, which I haven't heard of. But this was a survey of where they're sort of spending, where their investment allocation is from 2021 to 2022. And presumably this is sort of the latter half of 2022 when all the bad economic doom and gloom was happening, tech layoffs, et cetera, et cetera. And so the couple of really interesting shifts that I saw were sort of most dramatic. The biggest winner relative to 2022 increase was paid search, up 12% year to year. Paid social was down 15% year to year, and influencer marketing was down 10% year to year. And so, to me, if you put yourself in the mindset of these executives that the economy is shrinking and we've got to tighten our belts and all these things, none of which I happen to ascribe to. I think the economy is doing much better than most of the media reports. But if you put yourself in the shoes of these executives where they have to be doing this kind of stuff, it's a clear indication to me, and I think to you and as well, Greg, in terms of where the most effective spend of media is. And so, what we said for a long time, like social media is really more about branding. People are not there to buy. Influencer marketing, has sort of taken off as a discipline, but there isn't nearly the same level of intent as there is with search. And I should note also SEO increased 5% in their budgets alongside the paid search of whatever it was, 12%. And so it just sort of goes to show the importance of search as a discipline when you actually need to make money and when you're getting your CFO or your CEO, actively looking at where you're putting your dollars to acquire new customers. So I think it speaks well to search. I think certainly in the downturn, the actual downturn of kind of the late 2000s, early teens, my SEO consulting business and everything else related to search kind of went through the roof. So I think this bodes really well for agencies who are offering search as a primary service moving forward. I don't see search budgets necessarily constricting despite a potentially down economy in the next year or two.
I did get emails from a few clients. They wanted to know if they should be focusing more on Bing search, interestingly, sort of to tie this all together.
Right.
Well, I mean, the answer to that is yes, right? If they get a few more points of share, then absolutely yes. But I have two observations on that study, which I also found very interesting, obviously, because we wrote about it. So one is that paid search had a much bigger increase than SEO, right? Which still reflects
double the increase plus or minus.
Right. Still reflects the lack of clear understanding of the value of SEO or the mystification of certain kinds of decision makers in marketing around SEO. That's interesting, and a perpetual story.
Well, but it also reflects the fact that you can measure ROI on an ad a lot easier than you can measure ROI in
Correct.
SEO.
Right, absolutely. That may be the key point because if we search and social it's more complicated than direct response and branding, right? Or top of the funnel, bottom of the funnel. But that's kind of the crude way that the market thinks about it. And in times of constriction, constraint, retrenchment, people start moving money away from brand initiatives to direct response, more ROI driven, more sort of immediate ROI driven, short-term kinds of channels. And that's clearly the way people think about search. That is not. Yeah,
I think specific to SEO versus paid search, I think this is actually the time window of when we need customers and dollar revenue coming in.
This quarter
actually plays a really critical role right now in this climate.
Yes.
So because a good SEO program is going to take certainly months, if not years, to evolve into a place where you start to see some return. So
and that may be the hidden explanation behind the discrepancy is that paid search is much more controllable than SEO, and as Mike is saying, in many cases more measurable, and it's the kind of quarter to quarter thinking we need to hit our numbers this quarter, especially if you're a public company. So that's going to go into paid search, and that is to Google's benefit. So I would imagine.
Should we be buying Google stock this month or what?
Honestly, back to segueing back to the first topic, I do think it's going to be a really hard habit for people to break. I mean, I think the really interesting play here is if Apple decides to ditch Google as the default mobile search engine.
Which they're not going to do because it's $15 or $20 billion in services revenue. I mean, there was that story about how Apple's services revenue now at 80 billion or whatever it is, whatever the precise number is, 80 billion is bigger than McDonald's and Nike combined in terms of their revenue. And if a quarter of that is Google's, kind of slush money, whatever, that's, they're not going to give up $20 billion. The market will absolutely punish them. So that's Apple's innovator's dilemma, right?
Mutually assured destruction or mutually assured non-destruction in the market, right?
I mean, for the long term, for Apple's long-term well-being, they should be developing. I mean, they should be they should buy Neva or play with something that is going to incorporate, that's going to enhance Siri, that's going to make their search experience more interesting. But that's their innovator's dilemma. If they build out some alternative or drop Google, then they're giving up $15 or $20 billion on an annual basis, which investors are going to say, no, you made a big mistake and we're going to punish your, a lot of the public company thinking is driven by investor considerations. I mean, that's what's driving most of the layoffs. And that's the way a lot of these companies think, which is an enormous disappointment to me, because these companies were founded on the idea that they were about long-term strategic thinking and initiatives that were good for the user, and they weren't going to cater to the market, and they weren't going to do this short-term nonsense. And that's what they're doing.
But if you look at the hiring and the firing, they hired so many people during the last 18 months that the firings ended up being a very small percentage
6%
of that increase.
In Google's case. Yeah.
It's
the hires. So
it's right sizing. It's right sizing.
Right. But the press has been very negative about it. Whereas in reality, and also unemployment's at an all-time low, or whatever the current metric is. It's at a very low number. So it's not clear to me, despite the press, that these layoffs are that
destructive,
broad or disruptive. Right.
Yeah. But I do think it is creating the perception among executives that, hey, the economy is constricting and we need to tighten our belts. And at some point that perception becomes reality. Right. I don't think it's going to be near. I think tech will be by far the hardest hit sector from whatever this downturn is called. But I do think generally speaking, I think a downturn like this, as this data bears out, as my personal anecdotal experience of the last downturn bears out, generally downturns are good for search agencies is what I would say. So,
well, that's what the data in that study seem to reflect.
Yeah.
Okay. On that note, we will end another exciting episode of the Near Memo. Tell your friends about it. Subscribe to Near Media, and we will see you for episode 102 next week.
Thanks for joining David, Mike, and Greg. To stay on top of the latest developments in local, subscribe to our newsletter at nearmedia.co. We'll see you next week.